Pulse, from Wall Street to Mumbai and from Beijing to London. Global markets are moving to the beat of uncertainty. Investors are watching central banks, trade tensions and IPOs closely, trying to gauge where the next shock may come from. In tonight's segment, we take you through the top financial stories shaping the week ahead and break down the key market dynamics you need to know. We begin with three major headlines making waves across global markets. Central bankers, already uneasy about rising public debt and trade frictions, face a new concern this week: the potential bursting of a stock bubble, especially in the tech sector and AI-focused companies. Finance ministers and global policymakers gather in Washington for the IMF and World Bank fall meetings, where warnings about inflated valuations are high on the agenda. Officials are weighing the risks of market volatility and preparing for any fallout that could ripple through the global financial system. Chinese equities fell as investors continue to worry about trade tensions, even after U.S. President Donald Trump signaled willingness to engage in talks. The Hang Seng China Enterprises Index slipped as much as 3.6%, while major tech players like Xiaomi and Alibaba dragged the market down. The CSI 300 index, a benchmark for mainland shares, ended down 0.5%. Meanwhile, the People's Bank of China moved to support the yuan, raising its daily reference rate to the strongest level since last November, signaling efforts to stabilize markets amid uncertainty. Shares of Tata Capital edged up 1.37% on their first day of trading on India's NSE and BSE following a 155 billion rupees or $1.75 billion IPO. The offering was fully subscribed and priced at the top end of its band, marking one of the largest financial IPOs in India this year. Investors are cautiously optimistic as the financial arm of the Tata Group begins its market journey, with attention on how it navigates India's dynamic lending and investment environment. Turning now to a closer look at global market dynamics. European stocks opened higher on Monday, led by mining shares rebounding from last week's losses. Traders remain on alert as the U.S. and China continue to spar over trade, this time focusing on rare earth minerals, critical components in tech, defense and auto industry. Stocks in metals and mining companies like Fresnillo, Orbis and Anglo-American gained between 2.5% and 5.7% as markets adjusted to the new trade rhetoric. Meanwhile, financials and autos drove attention in Europe. Lloyds Bank climbed 1.1% after setting aside an additional £800 million to settle compensation claims linked to car finance mis-selling. European automakers also gained, with Stellantis up 2.5% and Renault rising 1.3% as the industry faces ongoing legal scrutiny over emissions testing. Pharmaceuticals saw gains too. AstraZeneca shares rose 0.9% after reaching a U.S. pricing agreement that could help avoid tariffs. In France, Prime Minister Sébastien Lecornu's newly appointed government signaled fresh budget plans ahead of President Macron's deadline, providing some fiscal clarity for markets. Over in Asia Pacific, markets fell overnight as investors digested China-US trade tensions, despite Trump's assurances over the weekend that relations will all be fine. Investors are watching closely this week for third quarter earnings from companies including ASML, LVMH and Nestle, as well as updates from the IMF and World Bank meetings in Washington. These developments could set the tone for markets well into the final quarter of the year. That's all in Finance Pulse for today. Follow the Finance 360 for more updates.